Let's learn the concept, the format, and the calculation on voyage accounts. Voyage account is prepared by shipping companies. Profit earned or loss made during a voyage, that's inclusive of upward and downward journeys, also accounted for. Here is a format also known as pro forma. Let's understand the debit and credit entries. Voyage account is debited with the following entries. Stores, that's expenses of using stores. The calculation will be opening stock plus purchases minus closing stock. Bunker costs are expenses incurred on oil, diesel, coal, and fresh water. Port charges are for loading and unloading of goods and parking of ships. Depreciation of the ship is calculated by using the formula total depreciation multiplied by period of usage and dividing that by number of months or number of days. Insurance charges comes next. Address, commission, and brokerage, these are payable to agents. Loading, unloading charges are also called stevedoring charges. Salary or wages or even manager's commission as applicable. Harbor charges or wharfage, that's the amount paid for using a wharf. Now let's get to the other side. Voyage account is credited with the following entries. Freight, that is income for all shipping companies. Primage, which is surcharge on top of freight. Passage money levied on passengers sailing along. And closing stocks of stores, provisions, coal, fuel, etc. Let's take an example. Pirate Shipping Company of Kochi had a ship by name Dolphin. Its written down value as on 1st of July 2005 was Rs 24 lakhs. The ship was insured for Rs 30 lakhs at 1% for voyage policy of Hull. The ship made a trip to Singapore and returned to Madras during the period 1st July 2005 to 30th September 2005. Let's look at the particulars related to the voyage. Expenses incurred comprises of salaries of crew at 25,000, fuel that cost Rs 55,000, port due charges of Rs 30,000, store expenses at Rs 32,000, and shares of overhead at Rs 16,000. Stevedoring is at the rate of Rs 3 per ton. Depreciation was charged on the written down value of the ship at 10% per annum. The freight was insured at 1%. Particulars of the freight consisted of leather goods, that's 1,100 tons at Rs 120 per ton, cotton of 500 tons at the rate of Rs 150 per ton, and sugar of 1,700 tons at Rs 100 per ton. In addition to primage at 10%, the brokerage payable was at 5%. Let's prepare the voyage account for 3 months. I would start with the credit side first, which is to the right side of the format, or pro forma. Let's calculate freight charges. Leather goods of 1,100 tons multiplied by Rs 120 per ton is 1,32,000. Cotton of 500 tons multiplied by Rs 150 per ton is Rs 75,000. Sugar of 1,700 tons multiplied by Rs 100 per ton will give 1,70,000. When I add these three, I would get 3,77,000, which is the income from freight. As you know by now, primage is calculated on top of freight. From the question, we have the hint of 10% linked to primage. 10% of the freight charge is 3,77,000 multiplied by 10, and that divided by 100, we get 37,700. Freight plus primage will give us a credit entry totaling 4,14,700. Now let's get back to the debit side. Salary, fuel, port dues, store expenses, and shares of overhead are directly given. Salary of crew is 25,000, fuel is Rs 55,000, port due charges amount to Rs 30,000, store expenses at Rs 32,000, and shares of overhead at Rs 16,000. Stevedoring charges need to be calculated. The total tonnage is calculated by adding 1,100 plus 500 plus 1,700. You get 3,300 tons as a total weight. Rs 3 is the stevedoring charge per ton. 3,300 multiplied by 3 gives 9,900. From the question, we learned that the ship was insured for Rs 30 lakhs, which gives an idea of the value of the ship. Insurance of hull at 1% is 30 lakhs multiplied by 1 divided by 100, which is 30,000. Insurance of freight is now easy to calculate as we already have the freight charges on the right side of credit, and that is 3,77,000. 1% of freight insurance will be 3,77,000 multiplied by 1 divided by 100, and that is 3,770. Next comes depreciation. The formula for depreciation is total depreciation value multiplied by period of usage, and that divided by number of months or number of days. Depreciation value is given as 24 lakhs from the question. The period of usage is 3 months. 24 lakhs multiplied by 3 months and you dividing it by 12 months will give 6 lakhs. 10% of 6 lakhs is 60,000. Brokerage is calculated on both freight and primage. Freight and primage put together is 4,14,700, which we have from the credit side towards the right. 5% of brokerage fee is calculated by multiplying 5 with 4,14,700 and dividing it by 100, and we get 20,735. Everything on the debit side when added would give 2,82,405. Profit or loss earned could be ascertained by subtracting the debit side from the credit side to get the balance figure of 1,32,295, which is profit in this case.